Hi there, Stan, the Annuity Man, America's annuity agent licensed in all 50 states. The question is how to calculate the future value of annuity due, which is, I got to talk to my handlers, my consultants, and all those people that help me choose these topics because I do a bunch of these, but this is a goofy one. I mean, this is absolutely goofy. By the way, Stanifesto is the first book I ever wrote on annuities. I got 7 of them out there. That's the first one. It's on Amazon. If you want a copy, you can shoot me an email, stan@theannuityman.com. I think we have some left over that I can send to you, but the Annuity Stanifesto, I found this shirt, so send me that. But we're going to talk about annuity due and all this doo-doo, and I don't know, I gotta have a meeting with my consultants. Okay, annuity due. Hey, in the world that I live in, I mean, these are structured, annuity dues structured like immediate annuities, so why not let's just look at immediate annuities. We can look at future valuations and all that stuff and use formulas that have letters in them as well as numbers, which sometimes eliminates me. But honestly, this topic has come up, and eventually my, sitting around the round table, I've got the lawyers, I got the handlers, I got the bodyguards, and then I got the consultants, and the consultant's like, why don't you do it? There's a couple topics on annuity due. And I'm like, because they're immediate annuities, and why are we calling that and making people get confused? If someone said to you, hey, you need to buy an annuity due, first of all, I need to meet that person. That's the first thing. Second of all, let's just look at an immediate annuity, because that's in essence what you're structuring with an annuity due that has periodic payments, and typically those payments start like immediately. But immediately for immediate annuities is 30 days from the policy issue date. So to me, I'm doing you a service to say, forget annuity due unless every carrier starts quoting them, which means it becomes a true commodity product, which means it becomes competitive. Until that happens, then we need to focus solely on immediate annuities, single premium immediate annuities for lifetime income. Because you can structure them to pay monthly, or you can say, I want a quarterly payment, or you can say, I want a semi-annual payment, or you can say, I want an annual payment. So both can be structured very similarly. The reason that I want you to focus on SPIAs, single premium immediate annuities, instead of the mythical unicorn annuity due, is because so many carriers quote it. It's a commodity product, and you're going to get the highest contractual guarantee by shopping for SPIAs. If that changes in the future, I come on the video and I say, it's changed. Things have changed. The due is due, and it's due, and do. But right now, the do, and the da, and that's not what we're saying. It's about immediate annuities. If you need lifetime income to start as soon as 30 days or as long as a year deferred, that's a single premium immediate annuity that was originally developed in the Roman times. The word annua, A-N-N-U-A, I've been told by my Latin friends. Do I have Latin friends? Dr. V, behind the camera? Anyway, they said that means payment. Okay, so that's where it came from in the Roman times, and it's been sold in this country for hundreds and hundreds of years. I got a good friend, Moshe Malevsky, who's been on my podcast, Fun with Annuities. He's literally gone over to England in the basement of churches and researched what's called tontines, which are similar to annuity dues. They don't really exist, but they are what they are. But in essence, today's version is a single premium immediate annuity. It's a payment. It's a pooling of risk with people your age so that you're going to get paid as long as you're breathing. And the primary pricing mechanism is your life expectancy or life expectancies, if joint, at the time you set the payment. You start the payment. And we can structure it so that the evil annuity company doesn't keep a penny. So let's just say you bought a single premium immediate annuity for life, and 2 years into it, you and your wife die in a fiery Learjet crash. That's not good. It's sad. But we structured it so that 100% of any unused money goes either lump sum to your beneficiaries or goes in payment form to your beneficiaries. You say, well, Stan, why would you ever do payment form to your beneficiaries? That's called lovingly handcuffing your beneficiaries. If you have children that fall under the category of wondering ambiguities, they really haven't gotten their shit together, you can say, okay, you're just going to get payments of that money not a lump sum. Now, they're still going to buy the Lamborghini or the Ferrari, just to understand that. But they're going to be making payments on it instead of buying it with a lump sum. And that's what you're trying to do. You're trying to create a payment stream, making sure the annuity company doesn't keep a penny. So you could do life with cash refund, life with installment refund, or joint life with cash refund, joint life with installment refund. As long as you're breathing, it's going to pay. So in the joint life scenario, if one of you dies, the income continues uninterrupted and unchanged for the second person's life, and when they die, it's either a cash refund or an installment refund. You know, I'm glad the annuity doo-doo came up. You know, can I get you those quotes? I can call, I certainly can, and they will take my call because I'm the annuity man, but it's not a competitive world. The competitive world is in single premium immediate annuities, and that's important because you're going to get the best pricing. You're going to get competitive pricing. They're going to be bidding on your age ranges to lock you in and to fill in that life expectancy tranche at that specific annuity company. So you learned a couple things today. You learned about annuity dues. And that's not like paying your dues. Pay my dues, son. Give me my annuity. No, that's not what it is. You learned about tontines or tontines, which is from my friend Moshe Milevsky, that he's been really researching those. And actually, I guess I can do a video on those down the road. All of this makes sense. The question really comes down to, what are the carriers doing? Where are the carriers focusing? Where can I get the best contractual guarantee? And right now for immediate income, starting within 30 days up to a year, single premium immediate annuities. Do me a favor, go to my site, run quotes. You can go to my site, there's calculators there, and you can run single premium immediate annuity quotes till the cows come home, as they say in North Kakalaki, North Carolina. You can also download my single premium immediate annuity owner's manual. You can actually ask for the Stanifesto. I'll send you that as well. And if you're really nice, I might even send you a hat. You know, we offered the hat the other day, the light blue Carolina blue version of it, and we offered it on a live event. Oh my goodness, we got thousands of people wanting hats. That's fine, we shipped them out. So if you're nice to me, maybe I'll do that. One last thing, do me this favor. Above my head's a box, and that box has a link to a video that you need to see. And that video explains how the process works with the Annuity Man, the application process. Dealing with my policy delivery and application team in my Las Vegas office, you need to see that because that's where the rubber meets the road in the annuity business, right there. They're fantastic. They do everything from start to finish. But take a look at that video. I think it's 10, 12 minutes where I'm just freestyling and telling you how it works. Proud of those people. They're great employees, and they will take care of you. My name is Stan the Annuity Man, author of the Annuity Stanifesto. See you next time.